Hello, welcome to the stream. Today's going to be a pretty short stream, just a weekly analysis of stocks, which is a new video format that I'm trying to implement. Let me see if the stream is working. Yeah, it is working. 1 second. Yeah, it is working. Okay, so let's start with IWM. We'll start with moving averages. So in moving averages with IWM, as you can see, um, it was, okay, let's start. Okay, we're only going to analyze from Monday to Friday since this is the weekly analysis. So it starts here, 10-9, and it ended here. Okay, so as you can see, why did it go up, IWM, at the beginning? Well, as you can see with the moving averages, just using the moving averages, of course, we're going to use both Bollinger Bands and moving averages so you can learn both. So for IWM, as you can see, it went up because the moving average of 20 and 40 crossed, and then the stock was above the moving average of 20 and 40. Then it went all the way up, well, close to the next moving average, which was of 100, which is what usually happens. Let me just put this. Okay. So basically, this is what happened. IWM, as you can see, broke the moving average of 20 and 40 from the week before. But again, we're just going to analyze this week. It starts going up, and then the moving average of 20 and 40 cross. Right when a moving average of 20 and 40 cross, if the stock is above, you buy a call. If the stock is below, you buy a put. I'm going to talk about the put later. So basically, the stock was above, so you buy a call, and then you buy it to the next moving average, which is the one of 100, and it goes from 173 all the way, it goes from 173.34 all the way to 177, which is about 4 points. It is a pretty good call, and it happened in, all right, let's see, Monday, Tuesday, Wednesday. It happened, no, actually it happened in 2 days. So just Monday to Tuesday. Okay, perfect. You buy a call for the next day, and bam, you would have gotten this 4 points for IWM, which is a good stock to get 4 points from, especially because the contracts are cheap, so you can buy a lot. This is probably, depending on your contract, 100%, which is good because of the new video I dropped teaching you how to make a lot of money just getting 100% from stocks. So basically, this is minimum 100% with a good contract. Good contract being near the money. I think you get an IWM contract for the next day for about $50 in the money. 100%, you're getting $50 like back. Depending on how much you invest, you get a lot more. Okay, so now as you can see, it didn't reach the moving average of 100. People would expect and probably sell at the moving average of 100 only. Like, they wouldn't sell here and then you just lose. That's bad. That's really bad. So, well, what should you do? You should be like, okay, what's happening here? Blah blah blah. Why can't I wait until it gets to the moving average of 100? Like, what if I have the call to moving average of 100, and because I'm waiting for the moving average of 100 to the stock to reach the moving average of 100, I lose all this money? Well, first, you just sell at 100%. This is 4 points. This is more than 100%. Easily more than 100%. You sell at 100% with the new strategy I taught in the new video, and then you're good. Also, I also use like a rule. So for example, it got to 177. Okay, where exactly was it? Okay, so like, okay, literally 177.02. The moving average of 100 though was at 177.70. Let's just say 178. What I usually do for moving averages is that I sell 1 to 1.5 points below the moving average. Why do I do this? I do this because of situations like this where it misses the moving average by 1 to like 2 points. And then what do? If you've left the contract, then you're going to be negative. You're going to be negative hard. But this could have been avoided completely if you just sold 1 to 1.5 points below. And this is what many stock traders will not tell you. Like, this is like the biggest secret. Selling before it gets to the actual zone. Let me just see. Selling. Yeah, okay, it's working. Yeah, selling before it gets to the actual zone is probably one of the biggest secrets that most stock traders will not tell you. And why do you have to sell before it gets to the zone? Well, it's simple. It's because a lot of people know that zone. A lot of people are using the same zones as you. A lot of people are using moving averages. A lot of people are using zones made up by the stocks reaching it. This is another strategy I'll teach you later on. And a lot of people are using Bollinger Bands. I'll explain that later. Well, actually, no, I'll explain it right now. So with Bollinger Bands, as you can see, you could have either used moving averages for this call from 173.33 to 176.88, or you could have used Bollinger Bands, or both. As you can see, Bollinger Bands goes from the edge all the way to the middle line, a strategy I teach in a lot of videos prior. And basically, the stock goes from 170 here to 176. Anyways, it was probably around here. Yeah, it was around here. You just had to wait until it reached the middle line, and then you sold. So, you could have just sold when it got to the middle line. As you can see, it got to the middle line, and bam, you could have sold immediately because it got to the middle line of the Bollinger Bands. B, you could use the same strategy I use with moving averages and zones in general. I sell 1 to 1.5 points below where the zone is. Many stock traders don't tell you this. It's a big secret. Well, not a big secret. It's A, most of them forget. B, they don't know. And C, a lot of people just forget about it. And a lot of people also over-exaggerate their zones. No zone is so perfect that you can like just wait until it reaches it and not sell 1 to 1.5 points below. 1 to 2 points below it. Now, why do I tell you to sell 1 to 2 points below it? Because so many people actually know these zones. There are millions of people, there are millions of traders that know this exact zone and know exactly where the stock is going, exactly when to sell. And why do they want to be the last ones to sell? Why don't they want to be the first ones to sell and just gain all the profit? Because they know that when people start to sell their contract, the stock is going to go down. And let's say you have millions of dollars, right? You have millions of dollars in this contract. Would you really risk being the last one to sell? The last one to sell is the one that has to take this whole hit. The first one to sell make the stock drop. So the last one to sell takes this whole hit. Now let's say you have millions of dollars on this contract. Are you really going to be the last one to sell? No, you're going to sell 1 to 2 points below the zone. So you can be the first one to sell, gain a lot of profit, and you're out. And 1 to 2 points isn't really going to affect your, let's say, profit. 1 to 2 points at max is going to affect your profit by like 10%. It's a 10%, let's say, sometimes right here it's a 10% gain because it didn't even reach it. Sometimes it does reach the zone, it's a 10% loss, but you're risking 10% for your whole contract. Because if you didn't sell 1 to 2 points below IWM, boom, your contract would have been dead. And that is a strategy. That is a very good strategy, 1 to 2 points below. Okay, I've been talking about it enough. You guys get the idea. So basically, IWM was above the moving average of 2040, went all the way up to the moving average of 100. You always sell 1 to 2 points below. Then IWM breaks the moving average of 20, and right when it breaks the moving average of 20, guess what you can do? buy a put to the next moving average, which is the moving average of 40. You could have gotten this put right here, 175.30 to 172.92. That is an incredible put, because when a moving average breaks the moving average of 20, it goes to the moving average of 40. When the moving average breaks the moving average of 40, it goes to the moving average of 20, etc., etc. So basically, you could have just bought a contract and boom to the moving average of 40. That is a 3-point contract right there. Then it breaks the moving average 20 and 40, both crosses. You already know what to do. Even though there's no moving average like below this, you just buy a put. You buy the put, you're set. You sell at 50%, 100%. Doesn't matter if you have a zone or not, since if you're selling at a 50 or 100%, you're gonna win anyways. That's what you do. Why? Because it crossed moving average 20 and 40, and IWM had a cross right there, and the stock was below, so it was a put. And as you can see, you can also use Bollinger Bands for this, because it broke the middle line downward. Well, not that it break the middle line, but it rejected the middle line downwards, and guess where it's gonna go? To the edge. It still has some space to go too. So you could have bought the put from here or from here. Doesn't matter. Or you could have used both. That is the best way to use it. Both. Alright, next stock we'll check is Amazon. Pretty big this week. Where did it start? Okay, yeah, right here. 10.9. Started at 126.12 and reached 134.35. That is an 8-point gainer by Amazon. That is 1,000% in a good contract. Incredible profits, right? So basically, let's just analyze why this happened. Why did Amazon incredibly explode? Well, moving average of 20 and 40 crossed, bam, 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 and Amazon broke the moving average of 20 and 40. As you can see, as they cross, Amazon breaks the moving average of 20 and 40, and it is above. So like when the moving average 20 and 40 cross, the stock is above. So guess what's going to happen? It's going to move to the next moving average of 100. And this time it does reach the moving average of 100. It goes from 127 to 131. That is definitely 100%. And then guess what it does? It breaks the moving average of 100, and it heads to the moving average of 200, where it is short by, guess what? By 1 to 2 points. So basically what I would have done here, I would have sold here, and then I would have sold here. That's literally what I would have done, and gotten massive profits. Why? Because I sell 1 to 2 points below the zone. As you can see, this is the trick, right? You think, oh my gosh, it just broke the moving average of 100. It's definitely going to reach the moving average of 200. It is going to reach the moving average of 100. Just 1 to 2 points below it, because every stock trader knows this exact same zone, and no one wants to be the last one to sell. So you sell 1 to 2 points below, and literally that's what happened. It stopped at 134.35. The zone was at 136. So yeah, 1 to 2 points below. It's like 1.5. You can sell 1.5. 1 to 2 points below, and bam, you sold. You would have gotten your gains, and then it just dropped. And then a good strategy to do for puts. It breaks moving average of 20, and guess what you do? You buy a contract to the moving average of 40. 20 and 40, just as I taught you. And what else can we check? This right here was 130 to 134. Definitely 100%. Incredible profits here. And then you could have used also definitely could have used. Oh wait, yeah, I was gonna check how long did it take. Okay, so 10.9. It took 2 days. It took 1 day. Wow, it took 1 day to go from 126 to 131, basically. Wow, it's like 5 points. Damn. Right. Okay. And let's see. You could also use Bollinger Bands. Bollinger Bands show that the stock was heading towards the middle line, and as you can see, it does. It goes from right here. Where is 10.9? Okay, 10.9, it goes from 128 all the way to the midline, which is 131. So you could have used Bollinger Bands or moving average, or you could have used, again, both. Both is fine. Both is actually more secure. Okay, next stock we are going to check is SPY. Alright, I have all the stocks here to check. Alright, so SPY this week, absolutely incredible, above the moving average of 20 and 40 as they cross. And you could have bought a mini call right here for the pros. Breaks the moving average of 20, so it's going to go to the moving average of 40. You could have bought a mini call right here. But anyways, the moving average 20 and 40 cross, the stock is above, so of course it's going to go to the moving average of 100. It's going to go to the next moving average. And then it goes from 425 to 434. That is a 9-point call. Absolutely ravaging that you could have gotten. Absolutely easily because of this strategy. And it actually surpasses the moving average of 100, which then could have led to buying another call. But this time it is far from the moving average of 200. Very far. Now, how can you tell with SPY? Well, first of all, indexes are a little bit more complicated. Why? Indexes manage, well, I mean, what is the name? S&P 500. SPY manages 500 companies. It's an index for 500 companies. It's a lot of movements, a lot of news. Indexes aren't as reliable. They do give a lot of money. Indexes do give a lot of money, but indexes like SPY specifically are highly volatile and dangerous. They do give a lot of money, but they can also take a lot of money. And as you can see, it did not reach the moving average of 200. It just broke the moving average of 100. And I'm pretty sure this did not reach the moving average of 200 because of the sad events of the war happening elsewhere. And of course, news does affect the stock market, specifically indexes that manage 500 companies. Other companies aren't as affected by news, but indexes are, especially indexes. Yep, indexes are heavily influenced by news. So, definitely could have gotten this 100%. This one, sadly, if you operate a SPY from here, it wasn't going to work. Specifically, again, because of the incidents in the world right now. I mean, you shouldn't really be buying calls of indexes when the world is in a situation like this. But of companies, yes, because as you can see, Amazon did respect it. You know, the 1 to 2 point rule. IWM did respect it. IWM is also an index, but it's just not as powerful and heavily influenced by news as SPY. But then, as you can see, it broke the moving average of 20. It headed to the moving average of 40. You could have bought this put right here. And right now, it's definitely going to reach the moving average of 100, which is one point more. For the call, you could also use BB. You could also use Bollinger Bands, as you can see. Where is it? 10, 10, 9, 10, 9. Okay, 10, 9. It was at 429. It goes all the way to 433, reaching the middle line. Bam. Could have used both. Could have used one. Does not matter. Bollinger Bands and moving averages are pretty similar and pretty good on their own right. Okay. Next stock we're going to analyze is Tesla. Alright, so Tesla breaks the moving average of 20, heads to the moving average of 40, as you can see. Nice put. And then it breaks the moving average 20 and 40, cross. So as you can see, what do? You buy a put all the way from 259 to 253. 253, 6-point put. That is definitely 100%. And then what's it called? The moving average of 20 and 40 up of 100 and 200 are about to cross, which would be incredible. If the stock is below, put all the way to like about here. Again, I'm going to teach zones in a later video. And then if above, then it's going to go up all the way up to here. Yeah, the moving average of 100 and 200 crossing is very significant because these moving averages are very heavy and very powerful. They take a long time to accommodate to the stock, but when they accommodate, they accommodate. So 2040 cross, stock is below, so of course you buy a put, and pretty simple. All right, next stock. The goal is to analyze 15 stocks. How many we got done? Okay. Oh, well no. How much time? All right, we're at 18 minutes. Around 18 minutes of the stream. Probably 20. All right, so Netflix, super simple. Absolutely beautifully simple. Rejects moving average of 100, goes all the way down to the moving average of, okay, where this 10.9 is. Okay, 10.9, where is 10.9? Alright, so 10.9, of course, is going to reach the moving average of 100, so 382, 386. I mean, no one's going to operate 4 points in a stock like Netflix. But if you did, good job. And then rejected by the moving average of 100, so you buy a put to the next moving averages. Bam, it goes from 387 to 380, which is a 7-point put. Absolutely incredible. Now that is a put with 100% value and more, depending on your contract. Then it breaks moving average of 20. Of course, it's gonna go to the moving average of 40. You know, from 20 to 40, you can buy a small put, or a small contract, or you can just leave the contract you have, And then what's it called? It breaks moving average 2040. They cross, of course, you buy a put, and then it goes from 377 to 353. Now, of course, it has no zone in the bottom, so it's pretty undecisive on that part. At that point, if it doesn't have a zone in the bottom, it doesn't have a moving average at the bottom, all you gotta do is just sell at 100%, just continue, 100%, 100%. And then you could also use this, honestly. You could also just use the Bollinger Bands at this point. Bollinger Bands clearly stated 383 to 364 because it went from the middle line, it rejected the middle line. And when it goes back from the middle line, of course it's going to go to the edge. So Bollinger Bands clearly said 384 to 364, 20-point put. It was pretty simple. Again, if you don't have a zone here, you can definitely get it from Bollinger Bands. That's why use both, use one. Doesn't matter. Just when you're undecisive, use the other. Oh, we already did IWM. AMD. Okay, yeah, we need to do AMD Netflix. Okay. So AMD, things are about to cross. Doesn't really matter since I already reached a moving average of 200. But if it breaks moving average of 200, then we go back to moving average of 100. Okay. So with AMD, 10.9, where is it at? Where is 10.9 at? 10.9, okay. So with 10.9, clearly it was above the moving average of 20 and 40, right? For the moving average, there was no zone above, so you really couldn't use moving averages for this, but you could use Bollinger Bands. Bollinger Bands, 105 to 109, they clearly said this because it goes from middle line. Okay, it goes from middle line to edge. What is this? Middle line to edge. So it's gonna go to the edge. At this point, you use Bollinger Bands. Pretty simple. Then it goes as a put. Breaks moving average 20. Of course, you buy this nice put to moving average of 100. Up. You can buy this nice put from the moving average of 20 to the moving average of 40. By the way, if you were debating like what are moving averages, which is who, yellow's moving average of 20, red is moving average of 40, green moving average of 100, purple moving average of 200. Okay, so you buy this put, bam, they're about to cross, you buy, and it breaks moving average of 20 and 40, so you buy a small put, moving average of 200. If it's this close, just don't buy it. Alright, next stock, NVIDIA. NVIDIA, alright, 10.9. 10.9. As you can see, it is above the moving average of 20 and 40, so it's definitely going to go to moving average 200. Then it breaks moving average of 200, and there is no zone above. So what do? You go to the Bollinger Bands, and as you can see, 10.9, 10.9, 10.9. As you can see, it's going to reach the edge. So of course, just buy a call from 453 to 469, 16-point call, and bam, you are lit. That is incredible. That is 1,000%, 100% of the time. Again, it breaks moving average of 20, and then it goes all the way to moving average of 40. He's buy a small put because the gap is big enough to trade in it. 465 to 455, 10-point put. Bam, you made your day. Incredible. Roku. By the way, you can leave in the comments stocks you would like to analyze. You say like subscribe, blah blah blah. I like your content. I like this stock, or what stock you want to be analyzed further. That I can also do. Okay, so Roku. Where's 10.9? Where's 10.9? Right, 10.9, 10.9, 10.9, 10.9. Okay, so above the moving average of 20 and 40, so of course it's gonna go to the moving average of 100. Bam, bam. I'm not really trading Roku anyways right now. But then it breaks the moving average of 20. Of course, going to the moving average of 40. And bam, it breaks that. Then it breaks the moving average of 20, 40, and 100 as they cross. This is a massive put. It goes from 70 to 65. And you are lit with contracts of 100%. And then if you didn't know really where it was going to go, you could have just used Bollinger Bands. It breaks, it breaks the middle line, so downwards. So of course, it's gonna go to the edge, and then 70 to 65, and bam, you are lit with the Roku this week. ABNB, let's see. All right, so ABNB, where's 10.9? Wow. Alright, so 10.9 breaks the moving average of 20. Of course, it's going to go to the moving average of 40. 125 to 130. Small call right here. And then it breaks the moving average of 20. As you can see, it did not reach the moving average of 100 or 200. How many points did it not reach by? 1 to 2 points. Guys, come on now. Strategy works. I mean, of course strategy works, but I'm telling you the 1 to 2 point rule. The 1 to 2 point rule works. And basically, did not reach it, probably because of the news again, and then 1 to 2 points. Y'all gotta sell 1 to 2 points below, just so you can stay clear of hedge funds selling before you, or bank selling before you, because if they sell before you, you are done. The stock is gonna go down. Then moving average of 20 breaks it downwards, goes to moving average of 40, breaks both, they cross. Of course, it's going to keep going down. And then you could just use this for information to where it's going to go down. And it's probably going to go near the edge, to the edge. 122. All right. What is the next stock? Coin. All right. Dun. Alright, so with coin, I should probably put timestamps in this video if I do upload it. You guys should let me know if I put timestamps for the stocks. So basically, 10.9, 10.9, 10.9, 10.9. Where's it at? Alright, so 10.9. It keeps going up. It breaks the moving average of everything, and then it just keeps going up to where? Well, you can just use Bollinger Bands. Again, it did not reach fully the edge. In Bollinger Bands, you don't have to use the 1 to 2 point rule. Just use the 1 point rule. It usually reaches it. And then, what's it called? It breaks the moving average of 20 and 200. If it breaks the moving average, it's the same thing. It doesn't matter what color they are. It's going to go down if the stock is below, and if the stock is up, then it's going to go up. Okay, so it breaks the moving averages, and then so of course it's gonna go to 70 from 78.39 to 75, a 4-point put, and bam, that is exactly what it does. You don't have to use BB this time because it's pretty clear. Then cross, so of course you're gonna keep going down, and yeah, they go to $72, and then, well, again, this is a strategy I'm gonna teach, but they go to that because of the zone. Not just because of that. Well, I mean, at this point, you could have just sold from here to here. This is what I would have done. 78, 75. Gotten my gains with coin. Alright, next stock is... Let's see. Okay, we are at 28 minutes. Yeah, this stream is going to be shorter. It's usually an hour long. But it's going to be a weekly analysis, so I got to make it shorter so I can rest. Alright, so 10-9. Let's see where it at. 10-9, 10-9, 10-9. Alright, so 10-9, you could have used Bollinger Bands. Bam, it goes from 136 to 140. We just go into the edge. And then if you wanted to use moving averages, you really couldn't because it was above every moving average and there was no zone above, so you couldn't really know. So at this point, you just use Bollinger Bands and you know where the edge is, and bam, you're lit with Google. And that's exactly what happened. But you could have used moving averages for this small put. It breaks the moving average of 20. Of course, you got to go to the moving average of 40. So 139 to 137, small put. Bam. All right, next stock is BABA. You know, I check a lot of sectors: Chinese, chips, and then big corporations. I mean, most of them are big corporations, but I mean big stocks like Amazon, Google, etc. All right, so BABA 10-9, 10-9, 10-9. You know, we're only gonna check 10-9 this week. So basically, stock goes up to the moving average of 200. Great. Then it just falls down. You could just use Bollinger Bands to know exactly where it was gonna go. 85 to 88. And then, once it reaches the edge, of course, it's gonna go down. You could have just bought a put there. You buy a put, bam, bam. It breaks the moving average of 20. So of course, it's gonna go to the moving average of 40. Where's the moving average of 40? 87 sorta to 85, $2 in BABA is crazy. Broke the moving average of 100, kept going down. They all pretty much cross, so it's gonna keep going down. And yeah, when they all cross and there's no moving average below or above, just buy a contract to 100% and you're chilling. Alright, so Meta and then Microsoft, and then we are done for the day. I think Apple isn't, yeah. Meta, pretty simple. No moving average could have told you what was gonna pop, so you could have just used what's it called, Bollinger Bands, and yeah, it goes from 309 to the edge. 318, and as you can see, it broke the moving average of 20 and 40. What's it called? And moving average 20 and 40 about to cross. So if they cross moving average 20 and 40, just buy a put all the way from 314 to 303 on me. 11-point put, and you're chilling. But first, the moving average 20 and 40 need to cross, and the stock needs to be below it. And then bam, a 10-point put right there for Meta. That is an incredible live trade idea for you guys. That's why it's worth it to watch the streams. Okay, so Microsoft, last one, I think it's that and Apple. So Microsoft, where's it at? 10-9, 10-9, 10-9. Alright, so 10-9, above the moving average of 100. Of course, it's going to go to the moving average of 200. Bam. Then it goes to 10, 13. It goes to 333.25. Doesn't reach the edge in Bollinger Bands. Of course, use the 1-point rule in Bollinger Bands because it's pretty short distance. Then it breaks the moving average of 20, so of course you buy the put to the moving average of 40, and then it goes from 330 to 327. Small put. It's pretty nice, and that's how you do it. And then if it breaks the moving average of 40 and 200, then it's going to reach 319, which is crazy put material for Microsoft. And then finally Apple. Alright, so Apple, pretty simple. 10-9. By the way, this is all live. As you can see, I'm analyzing these stocks live. I have no prior knowledge of them. That is my promise to you guys for the weekly analysis. 10-9. Okay, it goes from 176 to 179. So just a 3-point call. Of course, it was above every moving average. They crossed too. It was above every moving average. And then it was definitely going to reach the moving average 200. Bam. So it goes from 170 to 179. And then what's it called? Then it just goes down. It breaks the moving average of 20. So of course it moves to average of 40. All right, that is done for the night. Hopefully, you guys have a wonderful night. Love you all. Please like, subscribe, and like if you like the content, want to support more, want to see more. Every support, every um, constructive, good comment is appreciated. Every compliment is appreciated. And if you want to get TC2000, the application I use for trading, well, then you can just download from the link below. Thank you for everything and enjoy your night, day, morning life. Thank you all for everything. Each day we get better and better. Best traders roll out. All right. Just end it here. And yeah, best traders.